nail it pretty easily. Usually the market's going to squeeze you before it pays out, and you got to just hit it small. And that's kind of like the art of shorting, you know, and how it works. Did I do pretty good? This is why I fucking hate shorting. It's the worst. But hopefully I did pretty good at it. You guys learned something today. Apple going to lower lows, Nvidia. So remember, what did you guys notice on the stream today that I did differently while shorting? Did you notice something different in my approach while shorting? Something like just on the surface, off the top of your head. Did you notice me doing something very different than what I normally do? Like in my trade plan. Have I been doing something in this constant upkeep this morning to justify my trade that I don't normally do in bull markets? Well, I made money. Well, yeah, I made money, but more patience. Was there something I've been doing? This is a key element to shorting. Resilience is one thing, but not my technique, but was I watching something that I don't normally watch? Spider sense, yeah. I lost money. Well, actually, I'm up, but checking other stocks. There you go. Checking the stocks. Checking the stocks. You guys nailed it. That's it. Like on the surface, that's really what you want to do. So what stock markets only, index only sells off when the stocks are selling off. When it comes to eyeballing shorts, you guys never see me do this when I'm longing the market. I'm never like Apple, Nvidia, what are we doing, right? Long markets are just usually holding the fort and we're fine. But whenever the stock market is like on the edge of maybe selling off, I'm always watching the stocks, right? I'm trying to see where the momentum's coming from. And when markets do sell off, if they do, not saying that they will, but if they do, what you're trying to see is you're betting that the index is going to go lower because the stocks are going lower. When the index goes up because everything's always going up, I'm never really eyeballing the stocks to that degree. Positive res, I just trust it. But when resilience is on the fence and sitting at zero, I'm eyeballing the stocks, right? So whenever you're trying to like short or play a market like that, you always got like eyeball them stocks. Keep an eye on them to see what's going on. You know, clearly your bigger momentum plays, Nvidia, you know, it's going to have a big effect on today's market if Nvidia breaks its half gap and keeps going. Nvidia up here is going to kick resilience positive. When resilience is on the fence, I'm trying to find which stock is on the fence. Here's the fence, 144.3 on Nvidia, okay? If Nvidia jumps the other side of the fence, then the seesaw balances to the bull side again. See what I'm saying? So like anytime you're trying to short, don't be like, here's the chart, here's the candle, here's the high, here's the low. And the shorting doesn't work like that. People short the completely wrong way. You need to make sure the stocks are selling off to get the index to fall. And you got to watch key levels on stocks, right? The index key levels don't fucking matter. Doesn't matter where your pivots are, where your volumes are. The market just trickles higher above the pivot, above the pivot, above the pivot, and then the stock started selling. And the moment the stock started selling, the index rapidly responds to price into it, right? And that's what you gotta watch. And the whole idea of trying to bet on a short is really hard because this is what happens: trickle, 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 fall, right? And now I'm at the pivot again, and now I'm taking the trade again. Hopefully that makes sense. You guys learned something today? Shorting the market is fucking hard, but it requires more work. And I think a lot of people I teach that shorting and longing are like not equal and opposite. Most people are like, okay, let me long at my pivot, let me short at my pivot. No, when you're betting on markets falling off, you become like a freaking hawk to watch the stocks themselves, right? You can. One giveaway, man, things are hot right now. Can't do giveaway. Not yet. We'll do giveaway in just a second. Gotta watch the stocks. Markets are bullish. You just want to make sure nothing's bad. But when things are trying to become bearish, you need to eyeball what's causing it. We can use the scanner to find the stock, but I knew pretty quickly which one it was. Apple and Nvid, right? So we're watching these guys today. Apple finding lower lows again. Nvidia rejecting half gap. Nvidia below 144.3 is a sign, with Apple also trading lower, that tech and communication services are both going to be down, which is preventing the Nasdaq from rallying too hard. Okay. Now, the first selling wave and second selling wave we've had of some of these stocks, people have rotated into some of the other things. Utilities have been doing okay. And as people here are like, what the fuck, Matt's actually shorting? We'll tell you, Matt shorts like 1 out of 10 trades, don't I? Maybe even less than that. The rotation is fairly weak today, right? It was like a little bit of rotation. Most of the indices are kind of flat, not really moving anywhere. But yeah, right, dude. I'm never short the market. I almost never do it. When I short, dude, I'm a gangsta. I'm in it to win it. Like, wait till after lunch to do giveaway. Okay. Yeah, I usually do a giveaway at this time, but market's trying to get exciting right now. Last thing I'm gonna do is put on a cowboy hat and dance around and miss out on good stuff. Can't miss out on finally the market gets good. Market getting good. I don't know if I want to miss out on it. Oh, I need to check my Tradeify really quick. I think one of my accounts is ready for payout. Which one is it? One of them is ready for payout. Who are you? Oh, okay. You are good. Oh, I shouldn't even touch. One of my accounts I shouldn't even touch today. Damn it. I'm here. Here I am. It's qualified for payout, and here I am trading it like an idiot. Oops. Well, it did go up a little bit, so that's good. Yeah, one of my accounts is payout ready. And I'm over here like fucking risking losing it. Idiot Matt. All right, I'm good. I'm good. So we're good on that guy. Cool. So I get a payout from Tradeify today. Guess what my genius strategy with Tradeify, right? The idea was to put 30 to 50K buffer in each account before the first payout, and then make the first payout and then trickle forward. So this one account is getting its first payout with $30,000 of profit on a 9,000 target. I said, screw the consistency. I build a big buffer up front, take a little bit longer to get the first payout, and then every payout after is going to be slow payouts. So that'll never blow up the account. Guaranteed $75,000 when I go live. Mike, bro, you getting a payout? Dude, was that the one that you won from the giveaway? Because you won like last week. Bro, congrats, man. This is like the third short you ever see me take, and it's not easy. Like, shorting sucks. I hate shorting. I hate shorting for the very reason you got to watch me do it. It's boring. It sucks. You got to do all this extra work. You got to watch the stocks. You got to fumble around. You got to get into your short, close out, get in, close out, try to aim for it. It's not easy. Shorting is the hardest thing to do. And most people think it's easy. Markets don't trend lower. Markets always trend higher. They just sometimes fall lower when people are dumping the stocks. And that's like the mechanism of shorting is you got to make sure the stocks are selling off. What's up, baby? Do another one at lunch. You never seen the giveaway? Cowboy boots and a dance. Oh, Natasha. Oh, you're in for a treat. I can send people running for the hills super quick when I do my cowboy hat on and draw out the 6-shooters. Talking about a 50C move here. Yeah, it's pretty big if it does sell. The problem is it's likely not going to happen. But I do like to take the bet anyways, because the R&R is always really fantastic on this kind of setup. Yellow line reject. Yellow line. You guys know margin buffer limit is a strong rejection point. If resilience is less than 0, which it's at 0. When it's at 0, I'm very rarely bearish. At 0 usually means bullish. It needs to be significantly below 0 for me to get the downward momentum. But you have a resistance pivot and resistance pivot right here, both lining up. So now the question is, will the stock sell? And normally when I first took that pivot here and here, I stopped out. It came through here, went to there, and now I'm taking the trade again. The only reason I do take it's the R&R is fantastic. The probability is very low. And that's kind of the cool thing. It's like most of my long trades are like R&R is really low, but the probability is very high. I scalp like $1,000 base hits like they're nothing, right? This being a 4-to-1 trade is fantastic if it falls. It's worth willing like me to take a $500,000 stab. My confidence in this is like 55%, man. It's like right at the middle. Slightly greater than 50%, but it's not like I'm really happy like the market's crashing. It's just that there's a play in that if the stocks do sell off. Now the question becomes, will they sell off? And probably not, right? But we'll see. Yeah, that big beautiful buffer. Oh, the way into these Tradeifys. Oh, it's beautiful. It's dude, it's such a killer strategy. Any account with consistency, just hit them hard at the front. Blow up front. Don't let yourself do 2 or 3 weeks of work and then blow up because Trump tweeted something. Like all of my trades in Tradeify on these accounts when they were fresh were like trying to make 5K for 10K with 20% consistency on a 9K target, which means I got to make 30 to 50K or 25 to 50K to get my first payout of $3,000. All of my Tradeify accounts right now have $30,000 to $50,000 of payout of a buffer in them. And they're all trying to go for little baby $4,500 gains to get another $3,000 payout. I will never blow up those accounts. I will guarantee when I go live, I get $75,000, the max I can get. And that guarantee I'll be first place on Tradeify's leaderboard. That's goals A, B, and C. You're new here, can I talk about resilience indicator? Yes, the resilience indicator is a gap fill predictor on the S&P. Is by far the coolest thing that we've ever done here. And I'll do giveaway, you guys, in like 15 minutes. We're head over to my funded. What it does, and let me clean up some space here. All right, so we all understand what a gap is, right? Stock trades for the day, closes here. Stock opens here the next day and then continues to trade. Gap, right? You take the close price and the open price. Closed yesterday, open today, and there's a gap. We've gapped down in this case. And then you take the middle of the open and close, and that's called the half gap, okay? So every stock, everything has that kind of situation. You have an open, a close, and a halfway point. Okay. At the open and close is also the highest volume of the day, right? Any stock, anything will close and open with high volume. That's part of the MOO and MOC gapping, closing and opening process creates that gap. Order imbalances create the gap. So say in this example, we gap down on Apple, right? And this is Apple down here. If Apple gaps down from yesterday, we all know there's high volume here and high volume here because that's typically the open and closing volume. So high volume means liquid. And in the middle of two liquid spots is extra liquid. So half gap is like super liquid spot. Half gap is always going to be a strong volume pivot. Here's the half gap on S&P right here. Half gap is always strong pivot. Half gap is always strong pivot. There's always volume at half gap. Okay, now we've established that, right? Now my next idea that came out of that is that stocks move up when you're looking for sellers. Stocks go down when you're looking for buyers. So if you're in the middle of a very liquid spot, it doesn't want to go anywhere, right? Liquid stuff stays where they are. Now, if the market starts to move slightly higher, like Apple starts to move slightly higher in the box, it's looking for sellers, right? So what resilience does, it says, okay, if everything's at the middle, are we above or below the middle? If you're slightly above the middle, then the algorithm will say, aha, it's looking for sellers. And what it does is it extrapolates to the closing price and says, this is where the sellers will be. So if Apple moves just a smidge above the halfway point, resilience will calculate what's the extra amount of move it needs to take to fill its gap. Okay, we call that the implied move. So Apple moves up 5 cents, but we say, well, Apple needs to move up another 20 to fill its gap. Okay, so we have implied move for Apple, and we do that for every 500 stocks, or 500 companies in the S&P. Apple plus NVIDIA plus JP Morgan plus whatever. We take all those implied moves and add them up. And then we market cap weigh it. It's equal to the actual implied value of the S&P. If we can calculate that every stock needs to move a little further, then the S&P is underpriced right now. So the S&P should be pricing higher, therefore futures should go up. And that's the trick. It's designed with the implied move to be a leading indicator. Aha, Apple's moved 10 cents and needs to move another 40. Oh, so the S&P needs to move another 5 points. Okay. S&P hasn't moved 5 points yet. So we take the actual SPY actual value and subtract the SPY implied value, which is the calculated value it should be, which is equal to a function of all of these implied values of each stock. And if SPY is underpriced relative to its implied value, resilience will be above 0. If SPY actual is below, if SPY actual is above its implied, then it's overpriced. Resilience will be below 0 to let you know the S&P is overpriced. If the actual is less than the implied, it'll be above 0 to let you know you're underpriced. It's an arbitrage indicator. It's market cap weighted. It's absolutely, and it's a leading indicator because the implied move are moves that haven't happened yet. That's the brilliance of it. Resilience is never wrong. It's only early. It's exactly like arbitrage. Okay. So when NVIDIA, as an example, is at its halfway point and it starts trading lower right here, right? You can see this. Well, let me find an example here. So resilience is also designed to be sensitive right here at the middle. So an example, right? When NVIDIA passed through the halfway point right here, watch what happened to resilience. Do you see how resilience started moving through the top of the box, or so that negative to positive? This white line went positive just on NVIDIA crossing the barrier. And you can kind of see how there's always pivoting action at the high, low, and middle of this. And so when NVIDIA started losing its half gap again, resilience went negative. So it's basically a seesaw. It's like, where's the weight of the S&P on the seesaw, right? Is it left or right? Y'all see that? So on a scale of 1 to 10, how fucking cool is that? How cool is that indicator? Oh, that's cool as shit, right? Hopefully y'all like that. Right? The idea that it's designed, the implied move is the design to make it a leading indicator. It's designed to guess where the S&P will go, not just watching the market internals like tick and trend, right? Which is like, what's the S&P doing now? It's like the S&P can go lower because NVIDIA is here. Now it needs to fill its gap here. And you can kind of see that mechanism here. Every time NVIDIA is below, let me do a different color, right? Anytime NVIDIA is below this white line, it fills its move to the halfway point. It does this all the time. And I started noticing it does this all the time. When you're below, it seeks the bottom. So when it's just a smidge below, we reprice the S&P to include that move, the market cap weight change in NVIDIA, right? It's all right. I hate you, Kevin. I'm just kidding. Kevin knows it's awesome. He's just fucking around. All right. So that's exactly what it does. And I'm using resilience as an arbitrage type indication to tell me that the S&P is going to fill its gap or not. So when you boil it all down, what it really is a gap fill predictor. What's up, Barbie? Am I talking nerdy? I'm always talking nerdy over here. So the question becomes, if the stocks of the NASDAQ are down here and the NASDAQ futures and QQQ is up here, it's an arbitrage play. One should, by definition, short the index and simultaneously long the stocks to play that arbitrage. And because resilience is negative and it's a leading indicator by I don't know how many hours, I'm on the short side of this trade and it's fucking paying off. I was right. I was just early. And guess what, guys? Look at that. Look at that. Look at that. And it's pushing. It wants to connect down in here. So hopefully pretty cool, right? That's one of 15 indicators that we've made here with that level of complexity and coolness to it. What are the other lines? Well, it's the same philosophy. It's just looking at gamma exposure levels. So what we do is we take so I took it a step further and okay, let's say examples. This is S&P gamma exposure for weekly options, 595 for SPY, 592.5 for monthly. If SPY is at its gamma maximum exposure for JEX, or it's like we have a better version of JEX, but dealer exposure. This is dealer gamma exposure. If SPY is here and we wonder that's a really high volume pivot, are we going to pivot up or down? We do the same type of arbitrage with the stocks in their gamma exposure in the same way. It's a tiebreaker at blue. You get to blue. If blue is above 0, we bounce. If blue is below 0, we break. You get to orange. If orange is above 0, we bounce. If orange is below 0, we break. It's just tracking what the stocks are doing all at once. Right? Make sense? Oh, my chart is NASDAQ, sorry. S&P. You got it. So that's the whole thing, right? Now again, I'm not betting the market's going to crash. It's still pretty balanced here, but NASDAQ was the telltale sign all morning as to not trust this market. I wrote the word hold up. Hold up. Am I still in the trade? Yeah, -2. So it's sometimes you can't predict exactly. See what I'm saying? Yeah. So like Big C was right. Big C's your brother, right? Yeah. Slow, but it can happen, right? It's like it's showing you what's going to happen. The market's trickling higher and trickling higher and trickling higher, and then it slams back to meet, right? You guys now believe I have one of Wall Street's only leading indicators in my back pocket. And that's why. And how's it leading? Because it takes a guess on what the stocks will be doing. Nobody has a leading indicator because they're watching price action. Price action is a what's happening now indicator. But what we do is we make an inference, right? Okay, NASDAQ or NVIDIA is here. Then that means NVIDIA has to move to here to fill its gap. And therefore, the S&P can possibly be valued that much lower. Oh, it's not doing that. So there's arbitrage there. So I designed it to be a leading indicator. And that's how it works. It doesn't mean that it's correct of the moment. It's forecasting the future. And the forecasting of this was saying that the NASDAQ was not enough pressure to break outside of its redistribution zone and keep going. And NASDAQ opened here and closed there yesterday. Closed there yesterday and opened here today. Very weird for NASDAQ to fill its gap and keep going if the stocks aren't doing the same. And I designed resilience with that mentality, and it's helped me get that open and closed trades so good. Helped me avoid getting trapped in the bull trap. So remember this morning, the first thing I said was, "This is bull trap," and I read the word "hold off." Bull trap doesn't mean we're crashing, but I usually take the bet that we sell off when you have two strong pivots on top of each other. Yellow line and white line together are both very strong pivots to the downside with this confluence here. So, right. So I didn't long today, and it's very rare that I short. And everybody knows here, they're like, fucking hell froze over if Matt's shorting. All right, y'all ready to give away? Guys, ready to do a giveaway? Is it okay to front load the boot camp by watching the recordings right away? It's actually the correct way to learn anything. You nailed it, Carlo. Now, there's a thing called retention information. When you're doing active listening, when somebody's teaching you something, and all you guys have kids, right? Let me tell you something real quick. Tradeify, today's the giveaway. Type in the word Tradeify in chat. Hold on. There is a trick, and this helped me out in college all the time.
Order submitted.
All right. Let's go. Let's go. Let's get that trade, baby. Ooh, 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 ooh. Resilience is bay. Resilience is bay. Resilience is bay. Bay, bay. How'd I do today? Did I do all right? My friends, how did I do today? Now, technically speaking, the trade to the bottom of the box is the trade. I shall, again, take profit on that and wait one more time. If the market crashes and sells off, I'm absolutely 100% okay with that. Hold on. You guys, full update here. Oh shit. I hit max loss in my not max loss, but like daily loss limit. So I'm down to, I didn't take the screenshot. I'm too lazy, but I'm down $1,200 on that funded next open that I did. So that didn't work out either. But everything else turned out to go ahead. But all right. So one of my accounts I did not attack on the second go. I just assumed the loss on it. But that's okay. All these accounts are way the hell up. So it looks like up today I'm up minus 12, minus 18. So minus 3, 72, 80, 85, minus 2. So I'm at $5,500 today. Not shown in this picture is my $1,200 daily loss limit hit on my funded next that I just hit that loss limit and it stopped me out. I was planning on holding on to it, but it went, I literally stopped out right here. I probably shouldn't have hit it with such a big position though. Type in Tradeify one time, you guys. What's up, Joyce? Hi. How are you? Viral Pulse, you just got to type it in once. I promise. I promise. I promise. You only need to touch it once. Tap it once. Get a little tappy. Just one time. Just one time. Again, I don't like to bet the markets are crashing, but this was a good trade for gap fill. And resilience is, we say here at Rocket Scooter, is the saying is resilience is never wrong. It's only early. And that's what people say. They've always said that. There's no guarantee in the stock market, but this is the perfect read of the stock market because unlike market internals, which is reading the now, resilience is making an inference. And right now, the S&P is telling you that the index is going higher while the stocks are going lower. The arbitrage is there again. The index is bouncing while the stocks are doing worse. This is a second possible opportunity, or like the second trade. Oh, I like it. Oh, you guys, my internet's going out. What the fuck? There's a lightning storm going on. My UPS is just clicked on. All right, can you guys see me? Are we good? Check, check. Tell me you guys can see me. Are we good? Is the internet down?
Order filled.
Yes? Are we good? Okay. Whew. Yep. Look. The lights are flickering. My printer just reset in the other room. What the hell is going on here? Dude, it's like crazy lighting outside. Everything in here is like bzz, bzz, bzz.